Can you buy a house with bad credit? At this point, the question is asked and answered. However, for those of you who require a little more assurance, the answer is yes. With bad credit, it is possible to purchase a house. Keep in mind, however, that you may face higher fees or rates than people with excellent or perfect credit. Buying a house with bad credit, on the other hand, is not impossible. It's all about knowing where to begin and how to advocate for yourself and your needs, regardless of how bad your credit score is. And in this video, we'll reveal how to buy real estate with bad credit. I'll go more into detail, but make sure to subscribe to the channel and turn on post notifications so you don't miss our next videos. It's completely free and we post videos every week on real estate investing, so definitely keep watching. Bad credit makes it more difficult to obtain a mortgage. A low credit score makes you appear to lenders as a higher risk, implying that you're financially unstable or unwilling to pay back your debts. A low score, on the other hand, could simply be the result of not understanding how the score system works or having gone through a brief period of financial difficulty that forced you to take on debt. Buying a house with bad credit may seem impossible. I have some expert advice that will make the process much more manageable. If you're looking for information on how to buy a house with bad credit, we'll assume your credit score is most likely around 600, give or take. That's not a problem for us, though, because I've compiled a list of helpful hints for all of you with low credit scores. Number 1. Examine your credit score. Obtaining a free copy of your credit score has never been easier. At annualcreditreport.com, you can get a free copy of your credit report from each of the 3 major credit bureaus. Some websites make it appear as though you must pay for your report, but really you don't have to. Equifax, Experian, and TransUnion are the 3 national credit bureaus required by federal law to provide you with a free annual credit report. Examine your reports to ensure that all of the information is correct, and if you discover an error that may be affecting your credit score, you should dispute it with the credit bureau or the company that reported the incorrect data. You should also check your score on a weekly basis. This enables you to see how your financial behavior affects your credit score. Frequent checks will enable you to take quick corrective action if it is moving in the wrong direction. Number 2. Pay your bills on time. Payment history, which accounts for about 35% of your credit score, is the most important factor. To improve this part of your score, make sure that all of your credit card, auto loan, and other debt payments are received by the due date. One of the most significant reasons why most people pay late and end up getting late fees on their bills is because they simply forget what day it's due. This is why I highly suggest you to get your bills set up on automatic payment drafts, which means you don't have to worry about whether or not you pay it this month. Just about every creditor offers this option, so make sure you take advantage of it. Number 3. Work on paying down debt. The amount you owe accounts for 30% of your credit score. Your credit score considers your balance in relation to your available credit, which is known as your credit utilization ratio. This ratio should be as low as possible. For example, if your balance on a $5,000 credit line is $500, which would be 10% utilization, instead of $2,500, your credit score will improve by 50% utilization. If you have a large credit card balance for 1 month, try to pay it off before your next statement arrives to keep your credit utilization low. It's critical to use at least some of your available credit if you want to improve your credit score. Low credit utilization has a greater positive impact on your score than 0% utilization. Number 4. Stay away from hard credit inquiries. When you apply for a loan or a credit card, the creditor will usually run a hard credit inquiry, which will lower your credit score. Opening a new account or closing an old one will also decrease the average age of your accounts, a factor that accounts for 15% of your credit score. There are situations, however, where the benefit of applying for new credit might outweigh the impact on your credit score. Some lenders will give you the side eye or tell you to try again when that magic 3-digit number is higher. But with a little legwork, buying a house with bad credit is possible. Keep reading for more about these tips to help you get approved, but go ahead and like this video so these tips can spread to more potential home buyers. Number 5. Consider a rapid rescore. If you need to improve your credit score quickly, a rapid rescore may be beneficial. Each billing cycle, your credit report and score are updated. This means that if you pay off a credit card balance, for example, it could take up to a month for your new credit utilization rate to show up in your credit score. Rapid rescoring can help you get a better credit score faster. If you're close to having a good enough credit score to qualify for a loan or a better rate, your lender may suggest it. Number 6. Rent to own homes. Whatever path you choose, the end goal is for you to own your home, regardless of your credit score. If that's the case, a rent-to-own home might be a good option for you. We know you're eager to get your hands on a home, but a little more time spent renting can actually help your chances of becoming a homeowner. Rent-to-own is a unique process that allows many people with low income and poor credit scores to transition into home ownership more easily. When looking into rent-to-own homes for people with bad credit, you'll see how the process can help those who aren't in the best financial position to purchase a home outright. Number 7. Save for a larger down payment. A larger down payment gives you more skin in the game, making you appear to lenders as a lower risk. You won't need to borrow as much as before. If your income is too high to qualify for other low credit score conventional loan programs, such as Fannie Mae's Home Ready, a credit score of 620 may still be enough to qualify for a conventional loan. You'll need to put down 25% and have a debt-to-income ratio of no more than 36%. Number 8. Bring a cosigner. A cosigner with better credit than you could help you get a mortgage or get a lower interest rate. They will, however, be shouldering a significant burden: the obligation to pay your mortgage payments if you default. If they are unable to do so, their credit score will suffer. To put it another way, a co-signer must risk their savings and credit reputation in order to assist you. That's a tall order. Number 9. Consider a loan type with easy credit requirements. FHA loans have low credit score requirements. There's no requirement for a minimum credit score for VA and USDA loans. These two loan types, on the other hand, have more stringent eligibility requirements. VA loans are only available to military service members and their unmarried surviving spouses who meet the length and character of service requirements. USDA loans are only available to applicants with a low or very low income who live in eligible rural areas. Number 10. Shop around to find the best offer. Even if you have bad credit, you should shop around for a good mortgage rate. A company like Credible allows you to compare pre-qualified rates from a variety of lenders for free, all on one platform. It's possible that you're eligible for lower rates than you think. And if you aren't, you now know what you need to do to improve your score. People all around the world have been able to buy a home with bad credit if you follow these strategic steps. Even if you're unable to purchase a home right away, set a goal for yourself and you will succeed. It's all about getting yourself on the right track to realizing your dream of owning a home. Tell us in the comments if this is you, and don't forget to hit the like button if you enjoyed our content. For more ways to buy a rental property with no money or bad credit, watch this video at the end to help you get there. Until next time, we'll see you in the next video.